In this video, we're going to briefly go over what retained earnings are. The reason why is people frequently have struggles with understanding retained earnings and they kind of skip over it. So I've made a dedicated video to it because questions get asked on this. This is something we ask questions about. Retained earnings is how your net income connects to your balance sheet. This is an important concept to get. Income statement goes to the statement of retained earnings and tells you how much you've retained in the business and how much you've paid out in dividends and what gets transferred to your balance sheet. We're talking about the aspect of the income statement where how it flows back, this green arrow right here, what's flowing back to the firm. That's what we're tracking in the income statement and what gets retained in it. So that's what we're talking about in this video. So we have this expanded equation, and the stockholders' equity can be decomposed into paid-in capital and retained earnings, and the retained earnings can be separated into retained earnings from last year plus net income minus dividends. That's an important equation. Retained earnings in the business are what are the previous period's retained earnings plus the net income for the period minus the dividends for the period. That equals your retained earnings for the period right here. And so you might be asked a question about what were the retained earnings in our current period. And you'd have to get the prior retained earnings plus net income minus dividends. You might be asked what are dividends, and you'll be given retained earnings and then the prior period's retained earnings and net income, and you have to solve for dividends. You might not be given the prior period's retained earnings. You might be given these other three. And the reason why we do this and I ask questions in this way is not because you're going to have that kind of situation in the future. That's like a totally unrealistic situation. Your boss comes to you, tell me what the retained earnings were, last year if I give you just these three. That doesn't happen as a job. But what it allows me to do is it tests your knowledge to see if you know what the heck you're talking about and what's going on. And so that's why we do it this way. It's because it's a great way to test the knowledge. So there'll be questions on that. People get this part confused. The income statement. All right. So this is the first time you're seeing this, but this is how we actually account for things for with debits and credits and using the balance sheet and the income statement. And this is what I show on a lot of videos. You got assets that increase with debits, decrease with credits, and liabilities that do the opposite. How the net income statement, this arrow right here that brings the net income statement into the balance sheet, is via this retained earnings and what happens to this retained earnings. A lot of people get hung up on revenues and expenses and thinking about, which ones are which. They're basically sub-accounts of this owner's equity right here. That's how you need to think of them, as sub-accounts of this owner's equity that are presented on the income statement. That's what they are. Statement of retained earnings. Again, this is the basic question. Beginning retained earnings, net income minus dividends equals ending retained earnings. This is the question accounting professors love the world round. It just lets you know exactly, you ask a question on this, and you can figure out if they know what's going on with the financial statements. Expect questions like this in the future. And this is a much more complicated version of this, but this is a consolidated statement of stockholders' equity, the different years here. And this is 2013. And they have, what is the common stock, paid-in capital, and then the deficit. This deficit, accumulated deficit, this is deficit in, having negative net income. Negative net income is a deficit. And so if you take all these, your total equity for Tesla is 667. Common stock plus additional paid-in capital minus accumulated deficit gets you to this stockholders' equity account. Just to simplify, beginning retained earnings plus net income minus dividends gets you to ending retained earnings, and that's what gets recorded on retained earnings account. And so you can think about revenues and expenses. People get hung up on this, but you can think about them as subcategories of owner's equity in a way because they flow through to it. And that's all we have to say about that.
And that's all I have to say about that.